Let's give everyone a few seconds to join us. Good morning. Welcome to the Los Angeles Homeless Services Authority Finance Committee meeting. Today is Friday, March 20, 2026. This meeting is being recorded. Commissioner McMorran?
Here.
Commissioner Perkins?
Here.
Commissioner Rodriguez?
Here.
We have quorum.
Thank you so much. Good morning, everyone. Happy Women's History Month. Love that. Love the women leadership at LASA. All right, so we will thank you everyone for your grace and the few extra minutes this morning. We're going to go to acceptance, agenda item number 1, acceptance of minutes, including any corrections of the Finance Committee meeting held Friday, February 20th, 2026. Is there any corrections, amendments by my colleagues?
No, thank you.
All right.
No.
So we can just accept those. And we will move now to agenda item number 2, CFO report.
No.
Oh, there. Janine Lim, Deputy CFO of LASA. Good morning, commissioners, and thank you for joining us today. I'm here today on behalf of LASA CFO Janine Trejo, who was not able to attend, and I will be presenting the CFO report. I will be needing to keep my report high level and brief this morning because today, in addition to our standard monthly agenda items, we are also bringing forth our agency-wide mid-year budget update for your review and approval. Additionally, with the special commission scheduled immediately after this session, it is important that we remain on schedule to maintain quorum to ensure timely consideration and approval of all critical items. Before I begin my report, I want to acknowledge the committee's concerns regarding our aging payables and thank you all for your guidance and support these past few weeks. Moving on to payables and disbursements updates. As of my last report, on February 20th, our accounts payable balance was approximately 69.3. Today, that balance stands at approximately 68.8 million. At first glance, it may appear that limited progress has been made. However, during the same period, we processed approximately 60.8 million in disbursements while receiving approximately 6.3 million in new invoices. Given the scale of the agency operating under an annual budget exceeding 900 million, it is typical to see monthly inflows and outflows in the range of up to 70 to 75 million. As a result, accounts payable balances will fluctuate throughout the year as a part of normal cash flow balances. It is also important to note that accounts payable balances are not expected to reach zero on a monthly basis. Payables are only cleared fully after the financial close of the fiscal year, once all invoices have been and processed. Additionally, since our last meeting, February and March county invoices were released to service providers. We anticipate April advances to be released at the end of this month. Lastly, we are also in the final stages of securing a contract with KPMG to examine LASA's financial operations and identify ways to strengthen our process, timeliness, and accountability. Moving on to the LA County Fiscal and Operational Review. The County of Los Angeles Department of Auditor Controller Countywide Contract Monitoring Division, or CCMD, initiated its fiscal and operational review on March 5th. Since that time, we have provided all requested documentation, including detailed information on revenues and expenditures across all grants, cash balances, bank statements, accounts payable and receivable, working capital, and comprehensive records of cash inflows and outflows. We have also provided documentation of our processes for drawing down funds from the countywide interest-bearing account. We have met regularly with the CCMD team to support their understanding of our process, including invoice review, reimbursement and advance requests, and payment selection. We appreciate the professionalism and urgency of the CCMD team and thank Auditor Controller Robert Campbell for his engagement and support. The review is ongoing and we continue to respond and follow up with question and respond to follow-up questions. We understand the team is nearing completion of fieldwork and expects to transition into the report phase shortly, with the final report presented to the County Board of Supervisors anticipated in mid-April. While the review is still in progress and the auditors have not provided their conclusions or recommendations, we have taken a proactive approach. We have completed a self-assessment and have fully implemented corrective actions with defined controls, performance metrics, and ongoing monitoring to ensure timely and effective drawdowns and payments to service providers. We look forward to the auditor controller recommendations and will incorporate any additional guidance to further strengthen our processes and controls. Moving on to our FY 24-25 single audit. In addition to the county review, our other top priority is the annual independent single audit. We have submitted all required documentation to Clifton Larson Allen, the CPA firm conducting the audit, and the fieldwork has been completed. The initial, most detailed phase of the review, conducted by a team of 4 to 5 auditors, has been completed and is now in the principal review phase, conducted by the principal auditor, the most senior person of the engagement team, followed by a final national quality assurance review conducted by a team of auditors who have not yet been involved in the audit to date, providing an independent, fresh perspective. Clifton Larson Allen understands the importance of meeting the March 31st deadline while also ensuring that both management and the commission have adequate time for review. At this time, we do not anticipate any issues with meeting that timeline or allowing sufficient time for review. Additional details will be provided by Gita during today's commission meeting. This now concludes my report, and unless there are any questions, I will now turn it over to Associate Director of Finance, Budget and Financial Planning Unit, Enrique Olguin, for our annual mid-year budget update.
Thank you.
I do have one question, which is when do you anticipate the 24-25 to be closed? Because I know you're still processing payments for that year. So when does that school?
Our books are closed in LASA for 24-25, but if you're speaking to paying out the aging payables for that, I'm assuming that's what you're speaking of.
Mhm.
There are a number of payables that are currently from 24-25 over various funding sources. All of those funding sources have various reasons for why they are still outstanding, and we are working with the funders to resolve those issues.
And will you, I know there was a letter that went to providers, like, I think has it been 2 weeks now, or maybe last week, that said you wouldn't give an update on too much because there was a lot of discussion happening among the funders. So I'm curious if the providers will get a letter today that's more detailed, if there's like universal agreement now on the accounts receivable and with the
We
state
will
funds.
continue with sending out the same update that we had been in previous weeks.
The more detailed one.
Right, correct.
Great, thank you.
Any other questions? Thank you so much for the report, and let's continue on to item 3, review and approve LASA mid-year budget.
So these are the new ones.
Yes, they are.
Okay.
Is Christina not feeling well?
Christina is out.
Yeah,
today.
I hope she feels better.
Feel better, Christina.
Good morning.
Good morning.
Enrique Olguin, Associate Director with the Budget and Financial Planning Team, subbing in for Christina Hill, our Director of Finance. This morning, we'll be going over the mid-year budget for your review and consideration. Okay, so to level set, the fiscal year 25-26 budget was adopted by a full commission back in July in the amount of $828 million. Since the adoption, LASA has received amendments from various funding sources across various funders. Sorry about that. As I was noting, since adoption, we have had amendments across various funders, various funding sources, which we have been tracking internally to ensure that we are operationalizing those dollars. I do want to also indicate and note that there has been engagement on those increases through this government body. Program and finance, for example, full loss of commission. An example that I want to lead with would be when we do have amendment increases to our funder agreements, those do come to full commission for acceptance of those funds. In addition to that, when we do have new provider allocations from new funding that comes to LASA as being passed through to LASA, those allocations are also approved by the commission. So I do want to just highlight there are various touch points. And this is just summarizing and bringing the budget in a cohesive and slicing. And to be frank, we slice it and dice it in various different formats, as you can see in the slides. Something that we did add to this presentation as an appendix, and I hope the appendix is included. There is a variance analysis that the team has completed. It is very granular by funding source, and I hope this reduces the public and provides a transparency to the public of the increases on what funders provided, what dollars for what programs and purposes of those funds. Which brings us to today's presentation of the March 2026 Finance Committee report, where we are presenting the mid-year for your review and approval. So at a high level, this is the mid-year budget that we are presenting today. The amount is $912 million, which is an increase of approximately 10% from our adopted figure of $828 million, which is approximately an $84 million increase. Overall, LASA admin remains approximately at 5% of total funding, and the LASA run programs, which can include the outreach component as well as the provider dollars that are passed through to the providers, continue to be the lion's share of funding, reaching close to 95% of the total funds administered by LASA. So these next series of slides will be the revenue comparison. Here's a comparison from the adopted to what we are presenting today as a part of the mid-year. As I mentioned, for the public, there is an appendix which has the same visual with some variance explanation with some text. So just to summarize here for federal, one thing I would like to highlight is that LASA's fiscal years from July to June. The federal fiscal year and our awards are on a rolling basis. They start from January all the way to the start of December. So there is a carryover analysis that the LASA finance team has to complete on an annual basis for adoption. When we adopt funding, we attempt to do a projected estimate of final expenses, and we adopt the adopted budget with those estimates. This is truing up of that once providers have had the chance to finalize all billing as well as vendors. An example I can highlight here would be like the HMIS. Overall, at adoption, we had $2.6 million. Once all expenses came in from our BitFocus vendor, for example, or final payroll has been processed, that is being revised up to $3.1 million. So this is just an example of the projected carryover, the analysis that happens once the books are closed. Second, for federal, I like to highlight that YHDP, there is a substantial increase there. That is because this accounts for the renewal of these contracts that we receive from HUD. Next slide, please. For state, it is a very similar process. These are multi-year contracts, though. I think that's the difference here. These contracts do cross 3, 4, 5 years, with HAP6, I think, running until 2031. Similar processes taken on the state portfolio. We do an estimated or projected available balance ahead of July 1st, and we are now truing it up to what the carryover funds are. The funding that's available truly is. On the county, our largest contributor this fiscal year, there is a 7% increase across a myriad of funding sources. This is reflective of the Board of Supervisors and captures the Board of Supervisors amendments through their supplemental budget process. In the appendix, there's also a list of programs, which outlines and ties to the measure H/A difference or increase, which is like approximately $7 million. In particular, there are Murata programs internally for an example would be outreach. There are some carryover dollars that we were expecting and some one-time investments for example, La Casa, that funding that wasn't available as of 7/1, and the Board of Supervisors approved or there was approval for the latter half or 3/4 of the fiscal year to make prevention and I believe legal services whole for the year. On the city side, we do have a couple of sources as well and a couple of amendments that we have received. The city does go through their H&H committee, Housing and Homelessness Committee. Then there is the full council approval as well of those reports. So a couple items to note here is the Measure A increase. Sorry, the Insight Safe increase. It's going from 41 million to 63. That is the approval of funding going for the Insight Safe program for Q3 and Q4. Similarly, there have been a number of amendments for interim housing across various funding sources, which includes Alliance, City HAP, that is a key item there, and City General Fund. For private and philanthropic, we are maintaining as leveled from adoption, no change there. So those slides were the comparison of the revenue sources on the various funders and funding sources that we receive. This is once again the summarized bird's eye view of the totality of the funding that we have, of the $912 million, of which I want to reiterate 95% is program, and it is 5% that is managed for the administration dollars. Next, we will dive into the expenditure side. So here is the comparison of LAHSA admin at adoption. LAHSA admin at adoption, we presented a balanced budget, revenue equals expenditures at $44.4 million. Currently, we are presenting for consideration a revised admin of $48 million. The largest change is in the city in particular. The city did award LAHSA administrative dollars via the Measure A agreement and their alliance agreement. So I know LAHSA leadership has informed that we have had those conversations with their funders, that expressing the need for LAHSA administrative dollars to manage the influx of number of contracts, and the city is meeting us, and they've awarded this administrative dollars in Q3, I believe in February, somewhere in December it was approved and formally entered into our agreement in February. Since this funding, however, is of one-time use, it's use it or lose it by 6/30. What LAHSA leadership is recommending is that the state funding, the state admin dollars that we were earmarking for operations on the onset of the fiscal year, that we earmark that into the outer years. As we know, there will be a lot of ramp down costs that we will have to we will be incurring at the beginning of next year, as well as our operations team is attempting to reduce the fixed costs. There's a lot of meetings there too, so that is our recommendation. So overall, the net increase to admin that we are proposing is $3.5 million. You may ask where those funds are going, and the next slide will reflect that. So here, once again, it's the adopted budget reflecting the $44.5 million at the expenditure, like where the funding is going internally for personnel, all the way to office technologies and travel and training. So what we are proposing as a part of the mid-year budget, we worked internally to assess what the needs are, and what was prioritized were liabilities that we have and that we can attempt to pay out this fiscal year, knowing that LAHSA's reality of administrative dollars is going to change dramatically next fiscal year. So as you can see in the variance column, the largest increase is on the personnel. So as a part, there are two components in that figure. One is the loss of staff incur or accrue vacation hours. And when it does come to them folks transitioning into another role, into another agency, LASA is paying that out. So we are anticipating, based off of the estimated number of FTEs, how much we have to pay out. And that needs to come out of this fiscal year. As we know, next fiscal year, the reality is going to be a lot different. In addition to that, there is approximately 400,000 that was baked in for contingent staff, as we know we will need additional support. On top of that, another key item is on rent. As I mentioned, the operations unit is working on reviewing the leases to review if there are any negotiated buyouts that we can do proactively with various of our addresses or leases that we have. On the other hand, there are a few reductions, approximately 500,000 each on the office technologies and professional service contracts. For those, we reviewed what is feasible for services to be rendered by 6:30 and what is not feasible. So that is why those two were right-sized. Next slide. So next we move on to LASA's direct programs. Here's the comparison of adoption versus mid-year. There's an increase of $7.9 million. However, here, there's a caveat here. A lot of these funds we were already anticipating, but we did not include in our adopted budget. If I can explain a little bit further, it is for example, an example I can raise would be our outreach teams. The city provides funding or contracts LASA to do outreach. However, the funding in our funder agreement at the time of adoption only reflected 6 months of funding. The other half was placed in what they call their unappropriated balance, which is they earmark it internally at the city for LASA. And until there is a subsequent report, we show the need, we provide analysis on how expenditures are going, then they approve it and amend our contract. So that is one example of what I mean, that this is not just new dollars that are coming in where we have to devise a plan on what to do with these dollars. This is to continue existing operations and commitments that we have. So on this slide, you can see it a bit more detailed. You can see the various programs that are being affected. There's also an appendix of this table showing exactly what each of the variances, what funder contributed the variance. For example, the homeless count showing the 369,000. That is the Board of Supervisors approving an increase as a part of the supplemental budget process for homeless count. And so on and so forth for the various line items here. So you can see one of the largest variants is the 5 million for outreach. That 5 million is a combination of county and city funding for existing outreach workers. Next, we have the service provider section with an increase of $72 million from the original 700 million to $770 million. This increase has already also been operationalized. We are either bringing forth RFP recommendations to get the contracting going, or it was a timing issue from when we had adopted the budget versus when the city approved their contract, and these contracts are either amendments or have already occurred. Next slide will show what program department at LASA manages what programs, and then a comparison of adopted versus mid-year as well. And similarly here, there are key variances here with interim housing increasing. I noted that the city did award additional sites for interim housing there. I also see prevention going up. I believe that is for the La Casa funding that came through as well. From adoption, it wasn't available in adoption, but as a part of the Q2, it was incorporated, operationalized, contracts have gone out. But this is reflecting the trued-up budget for that. And similarly, there is a variance analysis in the appendix for everyone's review. which brings us to the recommendation. So the mid-year budget that's being presented, it is in the amount of 912 million compared to the 828 million at adoption in July, which represents a 10% increase. And this is the CFO's recommendation that the Finance Committee approves the 25-26 mid-year budget as presented. We could take any questions.
Thank you so much for the incredible detail, not only in the regular report, but this appendix. So really, I'm sure it took a lot of staff time. So I just really appreciate you all anticipating a lot of the questions that we might have and the public might have. So just want to start with gratitude on that. Colleagues, do you have any additional questions as it pertains to our mid-year budget and the recommendation before us?
This is amazing. Yeah, the appendix. Honestly, took a lot of I would love just to understand a little bit more about this increased city admin investment. How did that sort of play out? Did you get that slowly, 5.7?
Of course, so we've been engaging the city since the beginning of this fiscal year. We've been engaging them. We did initially receive the award for Measure A, their pass-through dollars from the county to the city, then to LASA. I believe we are managing PHK sites with those funds. And we were engaging them as they had identified city HAP underspend. They had a proposal. We had mentioned that we expressed our need for admin. It was in similar conversations with city HAP under.
Should be green. It died.
Sorry. So yes, we have engaged them during discussions about city HAP underspend. They ended up approving us to receive 10% admin from our Measure A allocation. I believe it's like 57, so that's where the 5.7 came from. So they did pass through that 10% admin to LASA, and any provider allocations that were committed to the 57, they just changed the funding source to city HAP. So we've been working. We know resources are limited, and where there's capability of shifting to underspend accounts or funding that's available, they were open to it and they executed that.
That's great. Thank you. Oh, I'm sorry. I had one other question. You were talking about this, and I'm sorry that I missed the detail. I didn't quite understand the $2 million increase on the rent. Slide 18.
Yes. So I was noting that the operations team is currently reviewing lease agreements. I think we even have a vendor that we brought on to assist to review our leases in detail. The $2 million that we had earmarked for rent is
You only had 755. That's I
Correct.
don't understand the
correct.
increase.
The $2 million is being earmarked for in the case where we can negotiate a payout for our lease agreements
Oh,
to potentially get out of lease
Got it.
lease commitments. So
so you've
that is
identified dollars that are sort of waiting that you
Exactly.
can use to
They're-
negotiate.
correct.
Great. That makes sense. Thank you so much. That's it for me. Because of the amazing appendix. I don't have any more questions.
Thank
I'm
you.
Sure, that took so much time. So
I know.
we're really grateful for the level of detail and just anticipating the
Awesome.
concerns. So thank you so much for the hard work and the
Thank you.
presentation.
It's great.
Okay, do we have a motion to approve our mid-year budget as presented?
So moved.
Second.
All right.
Commissioner McMorrin,
Aye.
Commissioner Perkins,
Aye.
Commissioner Rodriguez.
Aye.
The motion passes unanimously.
Thank you. All right, so we are moving on to our financial reports. LASA agency budgets versus actuals. Thank you.
Good morning, Commissioners.
Good morning.
Morning.
Sound check. Stephanie Okolo, Manager of Budget and Financial Planning. I'll be stepping in today for Christina Hill to present today's budget versus actuals through January of 2026. So as we are at our mid-year point, Losses fiscal year budget is currently 912.8 million, of which Losses admin budget comprises 5.3%, direct program at 10.3%, and service provider at 84.4%. Next slide. So overall, the year-to-date actuals for LASA admin are tracking at 46%, compared to last year fiscal year at 53%. This is primarily driven by our reduction in expenditures under our infrastructure and internal services. Direct program is tracking at 60% and service provider is lower at 38%. But this is mostly timing related, and an additional 14.3 million in invoices are currently processing, which will bring this closer to about 40%. Next slide. So again, our admin expenditures are at 46%. Some items to note are professional services and office technology at 34% and 24% respectively. Again, this is just largely due to the timing of invoices. We do expect there to be a pickup in Q4. Rent is significantly under at 16%. As Enrique mentioned, we've earmarked 2 million to increase this rent budget in preparation for a potential lease buyout. Next slide. So this slide depicts Losses admin across the two admin subcategories, rehousing system administration and infrastructure and internal services, which are tracking at 50% and 44% respectively. And then this final slide shows our actuals for our LASA run programs, which are tracking at about 60%, compared to 39% last fiscal year. Our outreach and master leasing appear a bit higher, but we're currently in conversation with our programs team on how to refine this gap. And we've also engaged both our county and city partners. Thank you.
Do we have any? I'm sorry, I'm getting used to the system. Yes, do we have any questions from colleagues on our budget versus actuals? And again, I appreciate the asterisk on slide 32 or page 32 in our packet, outlining where we are in the process. Appreciate that. Any additional questions, colleagues?
We talk a lot about the master leasing program and it being overspent, and there are other questions. Can we get a presentation on that? Maybe I should ask that later, but it'd be nice to get like a budget prep, like, because it is overspent and all the things.
So
Thank you so
yeah,
much.
you can mark that
Great.
moving
Thank you,
forward.
Commissioner.
Thank you. So we'll continue for 4.2.
Yeah.
Thank you so much.
Good morning, Commissioners and LASA colleagues and the public who may be listening. Alejandro Gomez Palma with the Contract Performance and Compliance Department. We are going to be presenting the service provider budget versus actuals. Next slide, please. For this period, considering Q1, Q2, and January, so it is through January of 2026, the year-to-date budget is 58%, and across all service providers, we are tracking at 40% compared to last fiscal year, which we were at 39%. On the first table with the funding sources, I would draw the commissioner's attention to the mid-year budget. So So the mid-year budget, all of these tables, the budget versus actual for service providers has already incorporated the mid-year budget, which was just presented and approved. So this is an increase, for example, for service providers, from 698 million, it is currently 770 million. So again, this budget versus actuals tables and report is based on the mid-year budget, which was just approved. Okay. We do note that there are pending expenditures for 14.3 million, and this consists of 213 invoices, 75% of which were submitted by providers a week before the report date, which was the 2nd of February. So that confirms once again that the issue now is not invoice processing because everything has caught up. For the next table, expenditures by program department, I would just highlight that permanent housing, as expected, is still the highest expenditure, and this is largely driven by TLS, rental assistance, significantly by home, the fiscal agents. For the spas, once again, the spa budgets have also been revised according to the mid-year budget. And just to note that the two spas that are tracking lower than the rest of the group, which is Spa 3 and Spa 8, Spa 8 has traditionally been following in terms of expenditure, and we'll be monitoring that closely. Next slide, please. So this is, again, the same information, but broken out by funding source. And just to draw your attention to two sources, the state ERF, as we discussed last report, didn't have formally a budget, but now that we have a mid-year budget adopted, the expenditure on that line item is presented, and this is primarily for home, the fiscal agent. And the other is the City Mayfair, which the city budget has also been included, and so now the expenditure is tracking against that adopted budget. This 40% across all funding sources represents a 6% increase since last month, but again, we've increased the budget to $770 million. So this percentage change is actually much more significant considering the budget increased so much for service providers. Next slide, please. So on this slide, we are presenting the annual advances that are issued to service providers. There's a lot of information here, but I would draw your commissioner's attention to the current balance as of the date of report, which was March 2nd. So we have $34 million worth of advances. For fiscal year 25-26, we have 20.7. And from last month's report, this represents a net decrease of annual advances of a little over 5.2 million, which is tracking, as we explained in last month's report. We are expecting the advances to be recouped more as the fiscal year proceeds. Next slide, please. Here, we are presenting the current state of the Measure H working capital recoupments, the 50.8 million that was issued to service providers. And we note that since our last report in February, we've recouped, service providers have been able to recoup 2.1 million.
Nice.
And this is 17 service providers. So I would recall that in last February report, there were 4 service providers that had recouped. Here we are seeing the uptick, which we expected because we've normalized contracting and billing. We do expect this to continue for the following months. So we are currently at 57% of the Measure H working capital issued, which is a 4% increase from last month. Are there any questions from the commissioners?
Thank you so much for, all right. And thank you, staff, for updating the system. I'm getting used to it. So thank you for that. But I am grateful for this presentation. And again, the level of detail here with the charts and appendix as well. Colleagues, do we have additional questions as it pertains to 4.2 budget via actuals?
I do have a question. So so the mid-year adjustment for the City Mayfair was 9.9. And if you look on slide 51, it shows that there's already total approved expenditures of 7.4. Tell me more about I'm just trying to understand the timing of that. Like, when did maybe the Mayfair money came a long time ago. It just wasn't in the original.
So this is, I think, and this was, I think, a similar question that we had last month. So we've been tracking expenditures for Mayfair. So the contract is executed, the service provider is expending, but formally, we knew what the budget was going to be expected from the city, but until the budget was adopted today, formally, we shouldn't have presented it because it hadn't been adopted by this committee, if that makes sense.
So had the provider just been putting out all that money with no
we've been
reimbursement? You have been paying because you knew it was coming.
Exactly.
That's awesome. I have another question on that same 51 for the state ERF. You said that money has primarily gone to home. Is that specific to like master leasing TLS then? Why is that ERF going to home primarily?
I would have to get more information on that, but that is for the rental assistance. It's not necessarily just a master leasing. It is for several service providers, but we can identify exactly what that ERF funding,
Yeah, I'm just curious how y'all spent that.
Yeah, absolutely. For next month, we can send it via email or.
Thank you for that. And then my last question, I don't totally understand on the annual advances, slide 52. So this is not like the quarterly advances you get from Measure A. That's not included here.
So these are the advances that LASA issues to service providers and not that we receive from the funders. Obviously, they're correlated, but these are the advances that we issue. For example, monthly advances from county funding or some funding sources would be included in the annual advances in the column fiscal year 25-26. So for example, if the commissioners will note for fiscal year 25-26, those are the funding sources for which there are outstanding advances. And if you look at precisely the county general fund, we have 15 million of advances just for fiscal year 25-26.
But why doesn't it show the Measure A advances then?
They're there.
400, it's way more than $439,000. I mean, they advance on a quarterly basis, 80% of the full expenditure. So how is it only 499?
Well,
I'm
this
confused.
is, again, we can provide the detail, but again, the advances from Measure A are issued monthly. And most of the service providers, there was a recoupment that happens as the subsequent month advances are also issued. And because of the contracting, again, I mean, we would need to look at the detail because the contracting was late. For example, the August, July, September, October, November advances were not really advances. They were paid out as actuals, as invoicing.
Okay. The county gives you money or maybe you're not, because it cannot be 439 unless I'm missing what this slide is representing.
Right. Go ahead.
Well, because there's this fund and y'all draw money down so you can get an advance to give, like the Janine referenced, the April advances will be paid at the end of this month.
Right.
And y'all been doing that every month.
Right.
So just tell me what this means.
Okay. Go ahead.
John Campo, Senior Advisor to CFO. What you're noticing there is because advances are a balance. It's not a total like expenditure. So the advances get dispersed, they get recouped. It's a moving target. So
It shows it shows a little line.
Measure A only came online 25-26. Those are prior
Okay, I see
year.
that. Okay, those are the previous. I don't understand. I want to understand. How could it be $439,000? I don't know if there could be do other people understand? It's a ton of money.
I think it's because, maybe I'm wrong, but it's because it's only what's reflected right now or what's available right now. Because as they're paying out, the balance is going down. So maybe we're interested in a month to month or the amount that's coming out specifically of Measure $8 is what
Sure, if you
Commissioner
want to know
Perkins
the
is-
But I
total.
don't understand how county general fund would reflect 15 million, 25-26. Measure A 25-26 would be 439 when the Measure A allocation is much greater.
We will have to look into the detail. And as the commissioner said, we can look at the recoupment, the payments and the recoupments and the advances issued. We can provide that.
Yeah, maybe we
I
can
don't
just
have-
have it.
Because it's in the millions and millions and millions. So maybe the slide is representing something I don't understand.
I think it's just the current balance as of the
That's
second.
very, very low. That's way
Yeah,
too
the
low. I
second.
mean, we're talking in the tens of millions.
We can. We'll,
Janine, tell me what I feel like you could maybe tell me.
The balance that's represented could have been run after a recoupment for the full month was performed. So every month we issue advances,
No, but
right?
it's not
And then
reconciled.
every month we recoup them. So if the recoupment is current, then when the report is run sorry, I can't see with my glasses.
Yeah.
When the recoupment is run, it's really a timing issue. So
Yeah.
say at the beginning of when the advances are issued at the end of the month, the balance is going to be very high because we just issued them. So if the recoupment is performed at around the time that this report is run, then they are recouping with actual expenses. And so that balance goes lower.
Yeah.
So if this report was run maybe right after the advances were issued, then you might see a higher balance. So I'm guessing this is a timing issue and recoupment was maybe possibly just performed after this report was run.
But I understood, I really want to understand this because I think it's so important. I understood part of the reason y'all made the decision not to pay the January advances was
Mhm.
because the reconciliation for June through December wasn't complete. So I find it hard to believe that come March 18th, the reconciliation is so clean that it's only, the variance is $439,000 on what is a tremendous amount of money.
Well, it would make sense because when we were behind on those recoupments for January and February, then we would have performed that recoupment to release the March advances. So
So
that,
you're fully up to date on, with a variance of $439,000 on the Measure A advances.
we have recouped for February and March, so the numbers should reflect that recoupment.
But I don't understand how would that be the case then if you look at what the service providers have billed? How are those things consistent? Because they're way underbilled. So how could you be that reconciled on Measure A?
We can give you a detailed accounting of line for line on the recoupment and the timing for Measure A.
Okay, that'd be cool, Janine. Thank you so much.
And I would just add, I mean, we need to look at the detail, but this report, this is information as of the 2nd of March. So in an ideal
Yeah.
world, the March advances would have been issued. But we don't have that, I don't have that information in front of me, but it may be the case, likely, I can't speak for finance, that the March advances hadn't been issued actually at the time of this report, if that makes sense.
No, I understand, but I don't see a world where this is possible to be so low when you're talking about tens of millions of dollars. So that's all, but I'd love to see more detail. It'd be interesting. Thank you.
Well, we can, I don't have any additional questions, but hopefully we can just have the Measure A breakdown as another report back for the committee as we move forward.
Thank you.
But thank you so
Thank you so
much.
much.
Appreciate
you.
that.
Great.
And we are doing great on time. It's only 9:25. Look at us. So we're gonna keep, yes, this is wonderful. And thanks so much to staff, because again, I know there's a lot of pulls on time, and we really appreciate your dedication.
Yes.
So we will continue on to 4.3, report on LASA financial position.
Good morning, Commissioner. I'm Maureen Sabino. I'm the Controller of LASA. I'm reporting on the LASA financial position on behalf of Christina Hill.
Oh, this is the tough one.
So the LASA net working capital as of March 2, we have a cash balance of 64.2 million. We have a total receivables of 75.3 million. Sorry. And we have a total payable of 69.4 million, and we have a net working capital of 70.1 million. Below that is the breakdown of all the AR that we have. So for the current AR, we have 7.4 million. We have over 1 to 30 days of 13.8 million. We don't have over 31 to 60 days, and then over 61 to 90 days is 21.9 million. And we have an over 90 days of 32 million with a total of 75.3 million. Our total payables for as of March 2, 2026 is 69 million. Current of that is 15.3 million. And then AP to 1 to 30 days is 13.3 million. You have an AP of 31 to 60 days of 12.7 million. We have an AP of 61 to 90 days of 6.2 million, and over 90 days, 21.6 million, with a total of 69.4 million. Commissioner, do you have any question on this page?
I do. So will you tell me more about why the county is AP over 90 at $14 million?
Yeah, that's because we have a Measure H. We have a Measure H invoices from prior years.
Oh, that those.
Yeah,
we talked
that we
about.
have not paid
Okay.
to date.
But y'all are working with the county to
Yes, we are.
get more money or something? Okay. Okay, cool. Will you tell, AR over 90, so there's 18 million to the county. Is that affiliated with this? What's that? What are y'all asking the county for that they haven't paid you $18 million? Does that have to do with this? Some of it's the measure. No, you haven't asked for that yet. So what's that money?
The
But we haven't
AR
paid you.
on that looks like a county HPI.
I don't know what that is. What's HPI?
These are the funds for the discretional grants. SD grants
Oh,
5.
interesting. Okay, interesting. And then what about the cities over 90 at 13.7? What would those be for?
The cities over 90 has to do with Inside Safe and Local Measure A.
So the county's 18 that you've requested, do you have a sense of how much of that is for it? If it's for the discretionary grants, it's not the classic like service providers reimbursement model, most of that money.
For the SDS, it's not the classic alternative.
So the 13.7 for Inside Save, like that's money providers are putting out that they're waiting for.
Yes, because for the Inside Safe, the payment model for the Inside Safe from the city is actually we get 25% advance. And then after the 25%, we do a cost reimbursement. So only 25% is advance and the rest of that is cost reimbursement.
When did you get that 25% advance from the city this year?
Normally we
The
get,
first one we got in October.
So it's not an advance, just to be clear, because the contract year started in July, right?
Correct.
So it's not, I mean, so I just don't think you should call it an advance.
It's
It's misleading. Please don't
sure,
call a
it's
county
misnomer
that advance if it
it
doesn't
comes
come on time.
after July 1st.
Yeah,
Correct.
so it's not an advance. It's just not based, you get it before the reimbursables. And then is the same true for the 17.9 city 6190? Is that Inside Safe too? What's
Sorry,
that?
which line?
I'm sorry, the 17.898, 61 to 90 for the city?
On the AR side, AP side?
I'm sorry, on the AAR.
On the AR side, I'm sorry, I'm not saying it. On the city side.
The 17.898, yeah, there we go. The city AR there, 6190, would that just be comparable contracts?
That appears to be, I'm sorry. We will look that up. My numbers are as of today, so my AR
Okay.
doesn't match.
And then you have $64 million in cash balance. So that's just all money y'all are trying to get out the door, basically. There's no preventing that from getting out, just needs to go, or
No.
there's still.
that's our cash available right now that we have in the bank. Now, if we have any payables that is outstanding on those grants, sorry. So if we have any payables outstanding on those grants, we make sure once we have the funds and there's an accounts payable outstanding that have the money, we release that to the providers.
Right, our outflows per month, as I said, was 60 million. So a cash balance of 64 is kind of needed.
So that's just
It's
all getting
appropriate.
processed right now,
Right.
basically. Okay. Okay. Thank you.
Should I proceed, Commissioner?
Oh, good. Yes, please. Okay.
Okay, so the next page is the LASA net working capital by funding source. Sorry. The next page is the LASA net working capital by funding source. So for the city, we have 35.6 million cash. We have an AR of 47.4 million. We have an AP of 43 million and the net working capital of 40 million. For the county, we have 21.6 million cash. We have an AR of 26.9 and we have an AP of 23.7 with a total net working capital of 24.7. So for federal, we have a 963 AR. We have an AP of 1.1 million. Net working capital is negative 140,000. For the foundation, we have 1.4 million cash. And for the state, we have 5.5 million cash. We have a we have an AR of 10,000 and we have an AP of 1.5. And we have a net working capital for the state of 3.9 million. Commissioner, do you have any question on this page?
How do you get the 140,000 back from how does that work out for the federal line?
So for the federal, what happened there is it's cost reimbursement. So we have to receive the invoices from providers first, and then we request. So that's why there's a negative balance there.
Okay.
And then we have the LASA interest-bearing accounts. These are in the LA County Treasurer's office. So for Measure A, we already withdraw for all the Q2 advances that we received from the county. So that's why now we are left with just the interest in there that we have not withdrawn yet. So we have 178.5 that is year-to-date interest for the Measure A. For the HAP 5, we have 15 million left in the interest-bearing account. We have a year-to-date interest of 74.5 thousand. So that makes 15,074,522. We have a reserve balance of 332,000 that earns interest of 931 year-to-date. That makes it 333,769. We still have the county PHK of 1,051. That is still there in the county. And then we have the LAC general fund of 7.2 million. That is still there, that have not earned interest yet. So for LA County, we receive a total payment of 49.6 million from February 2 to March 2. And there is a breakdown here of what are those payments that we receive from the county. But majority of this is actually the 29 million. It's a drawdown from the interest-bearing accounts. And also the February 18, 5 million is actually a drawdown from the interest-bearing account. Now the 14.9 million that you see here for Measure H, this is actually a cash request we draw for the Measure H balances. But even after that, we are still talking to county to get the remaining, to get more money for the outstanding invoices that we have.
Okay, so this elevates the question I was asking before. How this, I think mine is
It's
not.
better to just leave it.
Mine's dead. Thank you. I left it on. That was a mistake. Thank you so much. So on February 18th, you got $29 million of a Measure A advance. And then on the previous slide, it says on March 2nd that the balance of that $29 million was 439,000, right?
Sorry, which page?
I'm sorry, you have to go back because this goes back to the previous conversation. On page 52, you were talking about dates. So here we get the date. You got $29 million on February 18th.
Okay.
And then this report on page 52 is from March 2nd and said the variance on the Measure A advance was $439,000.
Oh, let me explain that again. This advances that we give provider, it's actually a running balance. So what happened is on a monthly basis, we give provider advances. And before we issue another advances to them, if the invoices are already there and submitted by the provider, we recoup that. So that advance, for example, if we have.
You'd processed $29 million in 10 days. Isn't that what that says?
Yeah, because that is for Q2. That 29 million that you see there, that is also all. Oh, sorry, this is for Q3. So what happened is on a monthly basis, we try to recoup as much
Right,
as
so
we
you
can.
should still have in that on page 52, you should have $29 million because you haven't paid all those advances yet. We can come back to that. Those things don't align and it just doesn't give us clarity on those advances, which has been such a point of contention. So we just need that clarity.
The explanation is still the same as we provided earlier. So we can work with you to go through the ins and outs of the Measure A expenses and advances
Okay.
so that you can understand how a service provider balance as far as their advances
Okay.
works.
Could we do that at the committee next month though? So it's public and sure. Okay, great. That would be awesome. Thank you.
Any more question on the county payments? If not, I'll proceed. So the invoices paid by LACT funder is 13.7 million. and that's for the city Measure A claim. That's all for my report, Commissioner.
Thank you.
I forgot we're sharing. Uh, all right. We're doing excellent on time. Thank you so much for all the staff that stepped in for Ms. Pill. And again, we're hoping that she feels better. Grateful for all of your work and just attempts to get everything out and on time for us. I know we had 2 requests for future agenda items, one that was a bit more time sensitive than the other as it pertains to Measure A, but are there additional commissioner updates and or agenda requests for future meetings? All right. Well, thank you so much. With that, do we have any general public comment? Do not want to forget that.
No, Commissioner, no public comments.
Wonderful. All right. We were worried about, or I was worried. So we can adjourn at 9:39 and reset for our special. Thanks.
Thank you.